Okay, great. In this video, we'll use the SWOT framework to analyze Tesla and organize our thoughts about the company. Hopefully, a 360-degree analysis of its strengths, weaknesses, opportunities, and threats will improve our idea about the firm's future outlook. Tesla was founded in 2003 and is on the mission to become the first successful pure electric vehicle producer in the world. Also, it aims to be one of 2 U.S. auto producers that have not filed for bankruptcy, the other one being Ford. Let's start with the company's strengths. First of all, everyone has heard of Tesla, right? So it definitely has strong brand recognition. Actually, Tesla is the most recognized electric car producer in the world. Quite an advantage with respect to other companies that are about to enter the industry. Moreover, many customers appreciate Tesla's innovator's spirit and the fact that it is a first mover in the automotive industry. Such originality, coupled with aesthetically pleasing design and positive customer experience with the product, justify Tesla's premium pricing and choice of differentiated competitive strategy. Elon Musk, Tesla's notorious CEO and major shareholder, is one of the most famous and appealing businessmen around the world. His ability to tell a story and involve the public is unmatched. By doing this, he wins over many people who actively follow his businesses and will likely become customers. What is very important, such customers can be very loyal if handled correctly, which is priceless in the long run. Tesla is attractive to people because it doesn't simply sell cars. The company sells a story, the story of an organization which is in business with an ideal purpose: to preserve the global environment. Probably, this is Tesla's most valuable strength. Along with that, we can mention several other important advantages the company has. Its cars are ahead of the competition in terms of battery range and experience with battery production and recharging. Tesla has put in motion a plan that would make it the biggest battery producer in the world. The company intends to construct several gigafactories, 3 in the US, 1 in Europe, and 1 in Shanghai, resulting in a significant cost advantage against competitors who outsource battery production. Tesla's autopilot feature has been operational for several years now, accumulating more and more data and testing in real-life conditions. In a future where we will increasingly depend on autonomous vehicles, Tesla's experience with autopilot would be extremely valuable. Of course, we also need to mention the company's supercharger network, allowing Tesla owners to charge their vehicles for free in a very fast way when on the road. In a perfect world, this would do. However, we live in a fossil fuel-dominated world, so let's consider Tesla's competitive weaknesses too. Number 1, and quite important, Tesla continued to burn cash in 2017 and 2018. The company has not turned a profit ever since it was founded. That's understandable considering that it grew rapidly with the goal of becoming a true global auto producer. Plenty of investments were made to achieve that. Negative cash flows are a problem, given that Tesla's stock price is under significant pressure from short sellers who believe the company is overvalued. The fact that Tesla isn't a traditional mass-market car producer became obvious in late 2017 and 2018, when the company started producing Model 3. The automatic production line it had constructed didn't function properly, and Tesla was unable to reach its target of 5,000 automobiles per week for about a year. This proves that it can be very hard to make the transition from being a premium sports car producer, delivering several thousand cars per month, to a mass-market company. It is very likely that the company will experience similar challenges when it attempts to realize cost efficiencies and improve margins. Traditional car companies have the advantage that they have been in the business of producing at scale for decades. Tesla is an innovator in its field, but some may feel that Elon Musk's idea to make all of their patents open source was a bit naive and idealistic, endangering the company in the long run, as it wouldn't be able to protect its inventions from imitation. The last weakness we'll add here is Elon Musk's divided attention. The fact that Tesla has a CEO who is responsible for 4 separate billion-dollar entities is a bit disturbing. First, is he going to be able to sustain such workloads in the long run? And second, how much of Elon Musk's time is spent working on Tesla? Besides strengths and weaknesses, we should also consider future opportunities too, right? Let's go ahead and list some possible developments that could help the company succeed in the long run. The electric car market is the future of transportation. Most people agree on that. How fast will the transition to electric vehicles be? Most people disagree on that. Nobody knows. Some experts believe it will happen over the next 10 years. Others, especially the ones involved with petrol refineries, claim it would take at least 40 years. One thing is certain, though. For Tesla, the faster the transition to electric vehicles, the better. Currently, the company is well positioned to win a significant market share of people switching to electric vehicles. In a favorable scenario, this could be great for Tesla, as very few of the other automobile producers are ready to compete in the electric vehicles market at full scale. So that's definitely one opportunity. Another one is that Tesla expanded its product range, remember? Because of their merger with SolarCity, the company now offers batteries, power walls, and other equipment related to production and storage of renewable energy. A rising demand for renewable energy could mean more business for Tesla. Furthermore, Tesla's huge industrial batteries will become a very interesting product line in the event the renewable energy market continues to grow at this pace. If it speeds up even further, the demand for storage of electricity produced by renewables will rise sharply. Of course, there are some very enticing opportunities ahead of the company in terms of economies of scale, increasing volumes of production, and hence lowering the cost of production. Think Model 3, for example. Economies of scope. Producing different types of vehicles will probably be more efficient when the range of products Tesla offers expands, and R&D costs can be shared between different models. Another exciting opportunity is factory automation. Elon Musk shared that, at some point, the production hell the company experienced was caused by too much automation, and the level of automation of its Model 3 production line had to be reduced. That was a painful experience. But now that Tesla has the scar tissue and has learned a valuable lesson, it will probably try to build up on what was attempted before, removing flaws from the automation process. This could result in improved production volumes and lower costs, especially in terms of production personnel. Okay, great. One of the weaknesses we mentioned was that Elon Musk divides his time between several companies. Well, this can be a problem, but it also can be highly beneficial in the right circumstances. Elon Musk is involved with firms like SpaceX, The Boring Company, neurotechnology firm Neuralink, and nonprofit organization OpenAI. At some point, it is highly likely that synergies between these organizations could help Tesla improve its competitive position and know-how, providing a valuable advantage against traditional auto producers. The last piece of our SWOT analysis are the threats ahead of the company. As we mentioned before, the gradual transition to electric vehicles can happen in 10, but it can also happen in 40 or more years in a favorable scenario. Slower transition is a significant threat because it strips Tesla from its first-mover advantage and puts it in a position to operate in a market that is not growing fast enough. Such a scenario isn't very likely, given that most research indicates the electric vehicles market is about to experience tremendous growth over the next several years. Of course, the entry of traditional producers is a significant threat, as we discussed. Firms like BMW, Volkswagen, and Daimler will undoubtedly enter the market. As Tesla continues to release new models, there is no guarantee production difficulties would not appear again. This is another threat. Finally, one has to consider tax incentives for electric vehicles that are allowed in the US and around the world. At the moment, governments subsidize electric vehicles through tax deductions and other similar incentives. In the U.S., for example, automakers are allowed to sell up to 200,000 subsidized vehicles at the maximum incentive rate of $7,500 per vehicle. Then incentives are halved to $3,750 per vehicle, and so on. Although people from the automotive industry have asked for these incentives to be kept intact, even after reaching the 200,000 threshold, U.S. politicians seem reluctant to do that. So, discontinuing incentives for electric cars is another threat for an electric producer like Tesla. Okay, perfect. I believe this wraps up our extensive SWOT analysis, in which we looked at Tesla's strengths, weaknesses, opportunities, and threats. Hope it was interesting for you, and thanks for watching.